Hi, this is Stephen here from Share Navigator with a stock market update, and it's April the 18th. So we're going to start with the S&P 500. So remember what the two main themes are at the moment. Um, you've got a couple of things going on. Obviously, the tensions in the Middle East, and also you've got these rising bond yields, which are causing problems for equities. And the likelihood now that the Federal Reserve aren't going to cut rates this year. So that's a big shift from maybe just 2 months ago, where some analysts were predicting six rate cuts this year, and now we're gone to from that to maybe not having any rate cuts, and now there's two analysts out there that are saying that they might actually have to increase rates. So the market is kind of grappling with all of that. So yesterday again, just on the S&P 500, um, the downtrend, the short-term downtrend continues. That's a new low put in yesterday. So remember, a downtrend is a series of lower highs and lower lows. And as you can see, the highs and the lows are getting lower in the short-term downtrend. Now remember, I'm talking short-term now. So this is not a long-term trend we're talking about here. In fact, if the market got down to this 200-day moving average, based on what information we have right now, I would be bullish then on the S&P 500. But right now, it's difficult to be bullish. Now, what I will say to you is you're going to get relief rallies within this downtrend. And if you look now at this 5-day RSI, it's below 20. So we're going to add now, the SPY onto our active trader watch list as well, right? Um, and the reason what I'm looking at here, if you even look at this downtrend here, which was 11% from peak to trough here, you had kind of relief rallies along the way. So, if you look at this here, we'll move across with the 5-day RSI. That was a buy signal. You would have made a bit of money here. There was another buy signal. Although you were in a bit early, you would have got out with a small bit of money, and there was your next buy signal down here, and you would have made a bit of money there. So I would anticipate something similar is going to happen here. You might get this 5-day RSI crossing back over. It will be a short-term kind of buy indicator. Now, that's short-term trading. That's all we're speaking about here. So right now, as long as bond yields stay high, and the Middle East tensions are still there, I think, the S&P 500 and stocks in general are going to be under pressure, but we will get short-term relief rallies and expect them. They're going to happen. Um, so what we've done is we're still in our short futures position. We're going to remain in it until the market gets to 4,900. After that, we're going to exit that, take that profit off the table, and then the next stage will be at what point do we actually go long in the S&P 500, and we will let you know at that moment in time. In the interim, what we're doing is adding to our watch list. So remember, we're not buying stocks. There might be some exceptions out there, like Nike, for example. So don't forget, Adidas had earnings out the other day, which were surpassed all expectations. So Nike's getting a bit of a boost off the back of that. And if you take it, it's an Olympic year, etc., and Nike share price is quite low, you might make an exception for something like Nike. But generally speaking, I wouldn't be a buyer of equities now unless I'm just going to actively trade, for example, the S&P 500 on an RSI crossover. And even at that, it might be a case of just, take a wait and see approach. You can see IWM again was down more than the S&P 500. So again, small cap stocks struggling. And then the Nasdaq, of course, was a worse performer as well. So that's breached the 50-day moving average, is trended to here. Maybe gets a little bit of a bounce here, but now we're in this rolling support. So, I mean, this could literally go back to that 200-day moving average here as well. And I think at that point in time, we will assess the news at that moment. But you would have made to take a bullish stance at that stage. I'm going to incorporate now the bond yields here. So you might get a bit of a relief rally today, because look what's happened bond yields since yesterday. So when I did yesterday's web meeting, the bond yields were up at 4.6 something percent. They're now back down to 4.56%. So a bit of a reprieve here in bond yields. So that's telling you two things. A, the demand for bonds are probably gone up substantially. Obviously the more volume of people buying into the safe haven, the interest rate comes down a bit. So it could be telling you that people are really moving to safety here. And also, you might, off the back of this, just get a small bit of a reprieve here in um, in stocks today. You might get a bit of a relief rally, and I think the futures are showing that at the moment. And then you can see the dollar here as well has weakened. So this RSI indicator worked for the dollar the other day. We kind of flagged that. Um, so this might kind of make its way back up to 108 here at this stage. But again, we'll have to wait and see. And the news kind of is now there's one or two ECB governors on this kind of saying, it mightn't be prudent to move if the US don't move. Um, so, whilst three rate cuts are priced in for the ECB this year, now all of a sudden there's one or two saying, you know what, it might be counterproductive if the Federal Reserve aren't cutting rates at the same time. So there might be a little bit of international relations going on there. Um, you know, um, and we have to be careful of that. Another thing you've got to bear in mind as well, Joe Biden is raising the stakes against China in terms of tariffs there. He's trying to appeal to steel workers in the US for the election. And there's threats of tripling the tariffs on Chinese steel imports and stuff like that. So there's a lot of factors at play here. So right now, a bit of a reprieve here, and back to the S&P 500 futures here. You can see there's a bit of a gain here. But remember, the recent gains, this is not the first time the market has opened higher and can reverse course by the end of the day. So remember, expect relief rallies in the S&P 500, bound to happen. A bit of a reprieve in the bond yields and a weakening in the dollar might help stocks today. So we might get a bit of a rally today or tomorrow. But I'd be careful of that rally. It wouldn't be an indication to get in for me. And what we have done as well, we've added to our active trader watch list. So you'll see more and more stocks have come in here. You can see Workday. We've added the S&P 500. Cisco's gone in there, not the technology Cisco, the food distributor Cisco. Um, Info has gone in there. Halliburton was added. Flutter. So Flutter is another one. So we've added a lot of stocks here, by the way, to the different watch lists as well. So keep looking at the US, UK, and Eurozone watch list. So Flutter is based on the UK market. So their 5-day RSI is below 20. The target price for them is above 20% higher from here, and it's right at the 200-day moving average. So maybe a crossover above that. So Flutter, think of Paddy Power bookmakers, all of this, they're casinos and bookmakers. That's what Flutter is. So there's been a few more added to the active trader watch list. But as I've said, we are not buying any stocks at this moment in time, maybe with the exception of Nike. Also on the long-term buy watch list, there's been more stocks added in here as well. So keep going through them. Again, I would probably hold off, maybe with the exception of Nike. But what we're doing now is getting our homework done for when we think the sell-off is complete. And the idea is have your homework done, have your shopping list ready, have the stocks you want to buy, you've done your homework, and then you start participating in it. So that's what this watch list is starting to grow now, as you can see, because the amount of stocks that have sold off recently have grown. So like the scans we're doing now, which were producing less than 10 and the results are producing over 100 now for quality stocks that may be oversold. So you can see that's why this list. But again, I want to reiterate, we wouldn't be jumping in buying a lot of this stuff now. We are just getting our watch list together. And that's what this long-term buy watch list is. And then on the sell watch list there, actually, there hasn't been a hell of a lot removed for it. We've added back in Bank of Ireland to sell off. Um, that was added back in yesterday. I see it selling off. It's still quite high. Sorry, it's still just slightly over the target price even after that sell off. So just something to keep an eye on there is this one. If you do own these stocks, maybe it's time to offload them. Okay, anything that's in this list here. So moving on, just on to our energy play there. So natural gas there is up today. So first update in quite a while. Will it break that 50-day moving average, trade above it and take out two? That's the key now. So again, we're building this position for the long term. and I will be happy to add more at these prices here. So figure out what your allocation is. Is it 10%, 15, 20% of your portfolio? And if you're not fully allocated now, I can think of worse times to be actually building your position higher. And real back off in crude oil here, which is going to be good for equities again. So another reason why we might get a short-term relief rally in the market today or the next day. Again, keep an eye on the bond yields. If the bond yields reverse course and start going back up, and again on the Middle East, if Israel do something today or tomorrow, for example, that sparks all the tensions again, that could change in a heartbeat. But right now, just based on bond yields, the dollar, and oil, my best guess is we're probably going to get a relief rally today or tomorrow. But that's all it is. It's a best guess. So please remember that. I'm not going to trade that. And then finally, we get on to the metals here. Silver kind of stabilizing here after a bit of a sell off. Copper's taking out another high here, as you can see. So again, this move and shortage, this move to higher to energy efficient methodologies across the world, the shortage of copper, and then we now have trade disputes going on, Russia being involved there, now the US involved as well, and it's all going to impact here in the metals as well. So that's why we're getting a bit of a bid here. I couldn't be a buyer here myself. So just in summary, guys, we're sticking with the short position. We sold our futures to give us a bit of leeway. I think the market, based on bond yields coming back in a small bit, might rally a small bit today and tomorrow, but it wouldn't surprise me if they ended up the day lower either. So I'm not going to trade that. 4,900 is our hop off point of that short futures trade. If the market got down to 4,800, 4,700, I will be looking to go long on the S&P 500 at that stage. If we do, question is, will we get down there? And it all remains to be seen. Okay, this is Stephen with a market update. Thanks and bye.